in 2 or 3 minutes. Just seeing more and more people joining us, and of course, feel free to ask us questions through the Q&A. We'll try to answer all of them by the end of this webinar, whatever comes in mind. And another interesting, for the next few minutes, you can write maybe in the Q&A, what do you think that's going to happen in the next month in the markets? Are we going up? Are we going down? Write it down in the Q&A, and we'll see the results at the end of this webinar in the indices, the forecast.
Okay, Ben, I see a lot of questions already, some interesting ones. As usual, the webinar is happening while we have very, very interesting market. As you said, it's going to be a very fascinating webinar today.
Yes, and I think we can start.
Yes, we're good to go.
All right, so let's start. 1 minute.
Okay. Good morning, everyone. It's very good to see so many people here today. As Ben said, we prepared for you a very interesting webinar. We're going to talk about artificial intelligence. We're going to talk about the stock market today. We're going to talk about the stock market in May, about the most promising sectors in the market right now, the sectors that we should avoid, and also we're going to talk about some stock picks for May. I'm going to start with a quick introduction and overview of I Know First. First, I want to introduce Ben, the head of our advisory team, that's going to present in this webinar today, to lead this webinar today. A quick introduction of I Know First. I Know First, we are AI fintech company. Our main solution is a predictive algorithm that produces on a daily basis prediction for the financial markets and identifies the most promising investment opportunities for both short-term, mid-term, and also long-term. We are combining different AI approaches. We are utilizing deep learning, artificial intelligence, machine learning. The predictive algorithm is generating daily forecasts for over 13,500 assets from different asset classes, equities, ETFs, commodities, currencies, cryptocurrencies, interest rates, and also world indices with daily forecast for multiple time frames, short-term, mid-term, and also long-term. This is a global solution. We are covering over 50 global stock exchanges, including the stock exchanges in the US, Canada, Europe, but also additional stock exchanges, interesting stock exchanges from all around the globe, India, Japan, Korea, Australia, China, Hong Kong, and many others. The algorithm was developed by a team of PhDs, AI and machine learning experts. Dr. Lipa Reutemann is the co-founder and leading the R&D team with over 20 years of experience in the field of artificial intelligence, machine learning, deep learning, PhDs from the Weizmann Institute of Science, with many years of experience. Besides them, we have, as part of the core R&D team, employees with the background of math, statistics, PhDs, data scientists. Ben Rubin is leading our advisory team. Ben has an experience, used to work as an advisor in the leading in Bank Hapoalim, the leading bank in Israel. I'm the CEO and the co-founder of iKnowFirst, together with Dr. Reutemann. I'm also lecturing for fintech at the Reichman University in Herzliya. I used to work also for one of the leading consulting firm, international consulting firm here in Israel. In terms of the traction and the clients, the iKnowFirst AI algorithm is being trusted by the world's leading hedge funds, investment houses, banks, family offices that are using this specific predictive algorithm in order to take a better decision in the market on a daily basis, to identify opportunities in the market on a daily basis, to identify the direction of the main indices, and also in order to monitor their own portfolio and exposure to the market. In the list, you can find here leading hedge funds, leading banks, leading family offices, and also investment houses. Recently, we have launched the first AI-powered mutual fund by relying on our predictive algorithm in a partnership with Meitav Investment House that you can find here in the list. The solution that you're about to see has received multiple international awards from different entities, including from UBS, Entity Data from Japan. We have received a very interesting award from the Geneva Wealth Tech Forum as the best international wealth tech solution. From time to time, we are receiving an additional awards, like the award that you can see on the left. And actually, all the awards are based on the very same predictive algorithm that you're going to see in this webinar. Together with Ben, we are also delivering a fintech course in the Reichman University, and we are proud to be part of that as well. The iKnowFirst predictive algorithm has been covered in the media in different channels, I-24, Yahoo Finance, CNBC. Go over the media page in our website to learn more about those media coverage. Just last week, we have been part of the Berlin FinTech event, and from time to time, we are attending different international events. In our website, you can find also client reviews from existing clients, from existing institutional clients, but also retail clients that have been using this predictive algorithm for many years. So what do we do basically? We are providing two tiers, two solutions to our client. First, it's possible to utilize the iKnowFirst predictive algorithm in order to receive daily forecasts, to identify opportunities in the market, to identify the direction of the main indices, to identify opportunities for both long and short opportunities. On top of that, we are also developing AI-powered investment product based on different strategies that we have developed. All the strategies are relying on the very same predictive algorithm that we're going to see in this webinar. And we have just launched the first AI-powered mutual fund here in Israel by utilizing one of the strategies that we have developed. The algorithm includes three components. By using the first component, it's possible to identify the most the most promising investment opportunities on a daily basis. The second component is a stock market intelligence component that assisting us to identify leading sectors in the market right now, the direction of the indices, sectors that we should avoid, and also promising regions around the globe, regions that we would like to focus on the near future. The third component is a customized solution when we actually providing customized forecast for each client portfolio by utilizing our predictive algorithm. The algorithm is learning the existing portfolio of each client and providing a daily forecast for the existing portfolio. And by combining all those three methods, it's possible to create the ongoing optimization of the portfolio. So how we do it? Every day, the algorithm is collecting huge amounts of data that coming from the entire financial market. We are using data that coming from the equities market, but also data that coming from the interest rate market, commodity market, currency market, and additional markets from the financial market. Basically, we are adding the daily data to our database. We are using historical data, and every day the algorithm is learning from the new data, learning from the historical data, learning from the combined data. And basically, by using our technology, the algorithm is building the complex network that exists in the financial market. The hidden correlation sets between the different components in this network. This network is being built without any human intervention by relying on our technology. And this network is being built every day from scratch. And before each trading day, the algorithm is building the most updated forecast for the different timeframes that we see on the right, for the short term, for the midterm, and also for the long term. The algorithm is also learning from each forecast, from each successful forecast, also from each failure. And this is another input that we are utilizing on a daily basis when we're generating the forecast. In terms of the technology, we are combining different AI methods into one machine learning algorithm. We are utilizing deep learning, artificial neural networks, genetic algorithms, supervised and reinforcement learning. And the most interesting thing about this predictive algorithm is the ability to separate and to focus on the most predictable assets on a daily basis. If we will take the S&P 500 as an example, the algorithm is able to separate the predictable part of the S&P 500 from the 500 stocks that are part of this index, and to focus on the most predictable assets on a daily basis. And we are going to see how it's possible to identify those assets on a daily basis. Ben, please tell us how we can identify the most predictable assets every day.
Okay, so the forecast actually comes in the shape of a heat map, as we can see here on the screen. On top of the forecast, we have the time frames that Yaron mentioned. For instance, in this example, we have the 3 months time frame, and we have some long and green cells and red cells. While the long cells represent, of course, the green cells represent the long position, while the red cells represent the short position. And we are using the algorithm to rank this entire investment universe by the signal and the predictability to indicators. The signal actually gives us the predicted movement of the asset or the potential movement of the asset. It's our internal index that moves from minus infinity to plus infinity, and actually ranks the entire map from the stronger movement that you can find on the top left of the forecast, and going down to the right up until the bottom right assets that have the strongest signal for short. As we can see in this example, it's Apple. This is a really long old example, so don't take that in account right now. To the right, we can see another example of 1 month. We can find XOMA that has 152, which is the strong signal for long. It's in green. And we can find the predictability indicator we can see in the bottom left of each and every square. And that gives us and presents actually the confidence that the algorithm have by forecasting the specific assets. It's actually a Pearson correlation measurement that moves from -1 to 1, while 0.0 represent a 50% probability that the asset will move to the predicted direction. Those two indicators are really important for choosing the best stocks from the forecast that you're going to get. At that end, we're going to see, and of course, we're going to see some few examples and understand more how exactly the signal and the predictability works and how to choose the best stocks from each and every forecast. So how exactly the forecasts look every day before the trading day, you're receiving a 6 time frame forecast, as you can see here, from 3 days, 7 days, 14 days to 1 month, 3 months, and 1 year. In each and every forecast, you have stocks too long or assets too long and assets too short, as you can see here in the red cells. And you're getting that forecast on a daily basis every day before the trading start, and you know which stocks you should focus on and which stocks you shouldn't. In the bottom of each and every forecast, you can find the 3 7 days or 1 3 12 month that you can see here on the bottom. With that button, you can switch, of course, between the shorter time frame predictions to the longer time frames predictions, and switch between the two. And let's see a few examples of last month. April was kind of rough month. We saw a lot of volatility. Most of the indicators and the main indices actually went down. But the algorithm actually succeeded to find some interesting stocks too long, and even, of course, too short. It's a long short algorithm. But in this example, for 3 days, we can find the best 10 stocks that the algorithm actually suggested to buy for a period of 3 days. That's the 3 days forecast. It was generated on April 23 in 2024. We can see it in the top of the forecast. And to the right, we can see the results of those stocks and the performance of those stocks that the algorithm actually chosen. And in the bottom, we can find the INO first average, the average of those 10 stocks. And of course, always comparing it to the benchmark that in this specific case is the S&P 500 index. We can find, again, the signals that I talked about earlier in the middle of each and every square. And we can find the predictability level in the bottom left of each and every square. With those two indicators, we know how to focus on specific assets. We can find the different stocks from different investment universe. For example, Snap, you can see that made almost 31%. Shopify, IAC, ETSY, a lot of stocks from different investment universe. And this is another example for a 3 days forecast. While the algorithm actually tells us to hold those stocks for 3 days. And we can find here Google, ASML, TXN, and a lot of stocks from different investment universe. And that was actually happening like a week ago. This is the forecast from April 24th. Another example is for a short. It's not just a long algorithm, it's a long short algorithm, and help us to choose both sides. Again, while you're getting the forecast, you get as long as long stocks, you get also stocks to short, as we can find here. Here, the algorithm focused on the 10 best stocks to short for the period of 7 days. That was generated on April 11, and we can see the results of those 10 stocks. And this specific forecast is the special forecast. It's the top 10 forecast that we're gonna get familiar with in the next few minutes. And what's special about this specific forecast is that besides giving you the best stocks from the entire US market, this specific forecast also gives you a forecast about the S&P 500 itself, on the index itself. We can find it here in the middle. And we see that the algorithm thought that the S&P is going to get down in the next 7 days, and it actually did, as we can find it here. And it's giving us an additional 10 stocks that we should short or like short sell in the next few days, or maybe sell it if you're holding that stocks in your portfolio in that 7 days. And we can see the average of this specific forecast was 4.69, and this is a really popular forecast, the top 10 and top 20 that we have in our website. Another example for short, we can find here the best 10 stocks to hold for 14 days, and we can see the remarkable performance that we see here. This is from the biotech universe or the pharma universe. And the average was 23% in 14 days, which is extraordinary, while the S&P just went down by 2.5%. And here we can find another forecast for 1 month. What interesting here is to find the predictability in the signal. As long as we are getting to the longer or the long forecast, we can find the signal and predictability are much stronger and with higher numbers. We can find here, for example, AR with 0.93 signal, and the predictability is 0.36. Again, 0.36, that was around 65% predictability, that the probability that the stock will move to the long direction as the algorithm predict. And we can find some energy stocks such as DVN, some mining stocks such as FCX, a lot of stocks from different universes that the algorithm finds and actually identify for a longing for this entire period of months. This was happening in 28th of March 2024.
By the way, I see a lot of questions regarding the packages that those examples are related to. I just paste the page with all the packages that we are offering. All those packages came from the top 20 package, top 10 package, S&P 500 package. And there are several examples that are very interesting. First, we see DVN. Energy was, some of you who have been in the previous webinar, we talked about energy a lot. DVN is an energy stock, and we can see that the algorithm identified DVN as an example. In the previous example, we saw also Google, that was recommended before the earnings, before the big jump. So it's very good and very useful to try to conduct a matching between the stock and the sector in order to match and to focus on the right sectors. Ben is going to talk about it in this webinar as well.
Yeah, AR and TRGP also, of course, an energy stocks, related energy stocks. So as everyone said, so is DVN, and we talked about it in the last webinar. I see some question about when the forecast is sent to you. It's actually sent in the morning before before the trading day, of course, before the opening, that you can organize and be ready for the trading day. And we suggest, another question that I saw, that we suggest to buy those stocks at the opening, as close as you can to the last price of yesterday's price. And that's our suggestion to when to buy those stocks, and holding them, of course, to the period that is appearing in the top of each and every forecast. or of course, because the algorithm is and the forecast has been sent on a daily basis and been updated on a daily basis, you can check every day if the stock is still good to hold, or maybe you should switch it with another stock. This 3 months forecast is also regarding big stocks as Google, Citigroup, JP Morgan, Bank of America, more big stocks than like mega caps that we can find in this specific forecast. And again, the results were pretty good for those 3 months from the beginning of the year. And even 1 year forecast that actually the algorithm gives us a 1 year prediction to hold those stocks for the whole year. And here we can see a really strong signals and really strong predictability. The longer the signal and the longer the time frame, actually, the better the signal and the predictability levels. So I'm going to talk about it soon, and that you should and always be stay focused on the longer time frames, such as 1 month, 3 months. There you can find high predictability levels and higher signals, as we can find here in the 1 year forecast. This was actually from April last year, and we can find the NVDA, LLCX, Shop Riot, and a lot of stocks that show good performance in that specific year. And besides the longing, also the algorithm gives us, as we saw, a short recommendations. And Yaron, you want to elaborate about that a little bit?
Yes, yes. So yeah, the market, as we experienced in April, the market is not only focusing and not always going to the positive side. In some situations in the market, as we saw in April, the market may go down. And here I would like to focus on a very interesting feature and a very interesting ability of the algorithm to identify those days and those periods. On the left side, we can see the forecast that the algorithm was generating around March 2023, around the beginning of March 2023. You can always identify the date by using the top out of each heat map. Here we can see that the algorithm had a negative forecast for the S&P 500 index, but also the algorithm had a very strong negative signal for different stocks that coming from the financial sector, the banking sector in the US. Among those assets, we can find Silicon Valley Bank, we can find here First Republic, FRC, and we all remember what happened just last March. On the right side, we can see a similar example from the end of February 2020, while the algorithm had a negative prediction for the S&P index, and the assets with the strongest signal actually came from the short selling side, from the bottom of the table. Even if you are not planning to short any stock, it's a very useful tool that can help you to time the market, to go to cash maybe, to move to you can buy the index instead of the stocks in your portfolio. There are several alternatives, and it's very useful to monitor both the strongest signals in each heat map and also the S&P 500 forecast that is part of each top 10 forecast. In the next slide, you can see that actually the prediction for the crisis that we had in the banking sector actually came around February 2023. We can see here a negative prediction not only for Silicon Valley Bank, but also for Signature Bank and other financial stocks. And we saw it also on the beginning of April, right, Ben? This year.
Yep, we saw a short position also in April as well. We're going to talk about it in a few slides. We also saw some negativity in the markets in the beginning of the year, as you can see here in January 4th, for the Eastern markets. We can find Hong Kong and the Chinese markets are here in the bottom of the forecast in red, while they had a really rough start at the beginning of 2024. Now, by the way, the forecast is a little bit different, so we're going to see it soon. And also about the 10, the clean energy sector that we also saw and predict that's going to crash in the beginning of the year, and that actually happened in the first few months of the year of 2024. And I want to talk about something about the late April. Actually, we are watching on the S&P 500 index, and I think the blue line is actually the beginning of April. And I think most of the traders here, maybe the I don't know, the technical traders could have, or maybe could have seen the drop that's going to start in 1st of April, but I'm not sure about that because it wasn't. It was a pretty surprising shifting of the weight from longs to short. Basically, in this part, I don't think that any investor right now would guess that the algorithm that the market is gonna get the downside, but our algorithm did, and from the beginning of April, we can see here from the 3rd of April, the forecasts of the indices, the indices forecast. We can find here multiple indices around the globe, and we saw a few things that help us to go short on the market, and we're going to see that actually in our strategies later on. But how did we do that, and why did we went short on the markets? You can see right here in the forecast that we have for 3 days and 7 days from the April 3rd. And we can find the S&P 500 in red, the Nasdaq as well, the Nasdaq 100, the Dow Jones, the Russell 1000. You can find a lot of indices, or many indices in the US, colored red, and that was our first warning that the market might shift and go downside. And we saw a lot of sectors such as the semiconductors, or the banking system in the US. Also here, the regional banks, KRX, we can find here that was colored red. And the other warning sign that we saw is the VIX and the VXN, which is the volatility indices for the S&P 500 and the Nasdaq. To which of you doesn't know those two, you should get familiar with important indices that help us to monitor the volatility of the market. And they jumped into the top of the list, the top of the forecast. We can see it here and here in the 3 days, in the 7 days, and the results after 1 month. We can see the results that is quite remarkable. The VIX went up by 7, almost 8%. The regional banking went down. The Dow Jones, the Russell 1000, the S&P, the Nasdaq, most of the main indices in April went down, and we can find it here. And the algorithm actually gave us a pretty good warning from this downside that we saw at the markets, and the heads up of maybe close our positions, maybe be more careful moving to the risk off positions like the institutional usually do while they see this specific forecasts. And that was really helping us and to our clients to get ready for April. That was quite volatile as we experienced. And another thing I want to talk about is not just that the algorithm give us the best opportunities. It is also using quite a good momentum and good placement that help us the exact point of going long or going short in the markets. For example, we can find AR that we talked about earlier in 28th of March, which is around here, and basically in most of April, which was as we saw a quite a rough month to find some long positions. We can find that the algorithm gave us one long position for April. We can see like a 10 position that the algorithm gives here, but AR was one of them in a really good timing at the beginning of April for 1 month, and we can see the results right away in this chart. Another stock for short actually was EPIX. We can find it here. We see good predictability to this specific stock. And on April 9, we saw, even when around this area, we saw a big short that is coming in that position for 2 weeks, and we can find the results right away here. Actually, the stock made 23% in this specific time frame of 2 weeks. And American Express as well, also in the beginning of February. This is a 3 months forecast from this specific year with a really good timing. We can find around here a good forecast for 3 months, a positive forecast for AXP, and see the results up until today, which is quite impressive. And you can say it may be a past, like past prediction that we gave, or it happened yesterday or a few months ago. So we decided to give you today's forecast. Actually, this specific forecast was sent to our clients today. Two interesting forecasts, the top 20 package and the ETF package that we're going to talk about it soon. I removed, of course, not all the stocks, just left the best 2 ones with the strongest signal and the one with the weakest signal, as you can see here. And that was the result that after the opening of the market, just before the webinar starts, I took this screenshot and see the results for this specific 2 forecasts. PAG and SIM was the long one in colored green, while MAC is minus 2.4 at the beginning of the trading day. And this specific is for 3 days. It's a 3-day forecast, but also right now I think it's a pretty good result after a few hours of trading. And the other forecast is the ETF forecast, actually. This one is giving us sectors or good indices that we should focus on in the US market and or worldwide, actually. But here we can find two ETF that was recommended by the algorithm for long. We can find GXC, which is the Chinese market that we talked about earlier, and we can find the Hong Kong, MSCI Hong Kong, EWH, that we can find here in green, while in the red position we can find OIH and XOP that was recommended for short by the algorithm, and we see the results as well going in the direction that the algorithm suggested just in the beginning of the trading day. So this is those are the forecasts that our clients got today. Of course, when you get the full forecast, you can see all the 10 assets that in the long and the 10 assets that are you can find in the short position. But I just took a few examples of the strongest signals for long and short to show you what's actually happened just today with today's forecast.
Yeah, it's interesting to see that the algorithm managed to identify opportunities even in today, while the Nasdaq is dropping by 0.4% and the S&P is going down as well. Both, by the way, all the stocks that you mentioned, right now the movement is even sharper. So OIH, for instance, is dropping by almost 2%. MAC as well is going down by more than 3% right now. So it's a very useful use case to illustrate the capabilities of the predictive algorithm.
Yeah, and in a more general way of how to pick the stocks and how to use the forecast, of course, you can find some videos in the website that will help you to read the forecast and explain you again about the signal and the predictability filters, the predictability indicators that we use. But I'm gonna give a short brief of what exactly or how we suggest to do those stock picking from the forecast. This is an example from the beginning of the year. We can see that the algorithm actually gave a really good forecast, a positive forecast for the semiconductors sector, from the home builders and the Indian market, Indian finance market actually, and the tech sector. By the way, those sectors went pretty good in the beginning of those 3 months of the year, the 3 months of the year. But what I'm saying here that is, if I'm seeing that the algorithm likes the right sector, as we saw at the ETF package, for example, we can find semiconductors there or XST or home builders, for example, that's appearing in this specific forecast. So I can buy the index itself or the ETF itself, but I also can do a drill down into this specific sector. For example, if I'm picking the semiconductors forecast, I can see that I have I have stocks from this specific sector that the algorithm is recommending me to buy for different periods. I again suggest focusing on the 3 month and the 1 month periods, giving more weight to the longer time frames of the 3 months and the 1 month. And then after that, I will search for the higher predictability levels. For example, I can see LRCX with 0.7, AZTA with 0.7. This is high predictability levels that I like and I would like to choose. And then I'm choosing for I signals that I can find in the first row. And the third thing that I'm looking for is a stocks that it appears in multiple time frames. If I can see it in the 3 days, 7 days, 14 days, 1 month, 3 months, that's amazing. Those are different undependable time frames that the algorithm gives a recommendation for. So focusing on those stocks that appear in multiple time frames, searching for those high predictability levels and the high signals, and you can see the results after 3 months. This is not exactly up to today, it's just after 3 months. And as well as we saw the home builder sector as well is one of the leading sector. Again, choosing from the sector and focusing stocks from the specific industry, as we can find here. Again, opening the forecast on the longer time frames for 1 month, 3 months, and 1 year. And then I would choose WSM because of the high predictability level and multiple time frames. I would choose IBP because the high signal and good predictability, and BLD again, as I can see it in the 1 year and in the 1 month and 3 month. And you can find those results after 3 months of trading from the beginning of the year, which is really impressive. So again, how to trade and how to find your specific stock, do the stock picking from the forecast. You can find videos in the website that will help you do so. And to our next subject is the Magnificent Seven. And those big seven stocks that we all know and controlling most of the market. And we have a few interesting stuff about them. Yaron will tell you right now.
Okay, first, we are working with several hedge funds that their main focus is basically the Magnificent Seven. And here you can see the reasons why. As you can see, the Magnificent Seven have a higher weighting in the MSCI World Index, more than all the stocks in the UK, China, France, and Japan combined. In addition, those stocks are actually the S&P index is relying on those stocks, as we can see on the left side. In terms of the weighting of those stocks, we can see how large is the weighting of those Magnificent Seven stocks.
Almost third from the S&P 500.
And this is even before the recent jump of NVDA, right?
Yeah.
So it's even higher. And we can see that in the Q1 in 2024, we can see how on one side, NVIDIA, Microsoft, Meta, Amazon contributed to the main index. And on the other side, we can see how Apple and Tesla actually provided negative contribution to the total return of the S&P. The total cash is also something that we should discuss. The total cash less the total debt of those Magnificent Seven stocks. Therefore, more and more hedge funds, institutional players are monitoring those 7 stocks, and we are providing a very interesting solution that helping them to monitor those Magnificent Seven stocks. And right now, this solution is available also to retail investors from all around the globe. Ben, show us, what do we see here?
Yeah, actually, one of the members in the webinar here asked about the algorithm saw the crash of Meta, and this is the perfect example for that. We can find here the Magnificent Seven forecast. It's actually 8. We added Netflix, and we added a few more main indices such as the S&P 500, Dow Jones, and the Nasdaq, so that you can get the full picture of the market, not just the big stocks in it, the indices are themselves. And you can find a forecast for 7 days in 21 of April 2024, right before the earnings of Google and Meta. And Meta, we saw that was pretty red, and the crash that came after it, this is the 21st of April. We are talking about around this time of the forecast. And the algorithm actually saw that big drop that came on Meta. And the only one that was actually kind of green in this 7 days forecast was Google or Alphabet. And actually from the 21, gave a pretty big jump up, of course, that we all saw in the last few days of the trading in the market. So those are a really important forecast, and a forecast that now is available for retail clients in the website. And we're going to combine it as well as one of our interesting sales that we have in this end of the webinar. So it's worth waiting to the end of this specific webinar. But that's really interesting, and I think important package that you can purchase in the website. And of course, we won't forget the NVDA, also the same forecast that we saw earlier in April 5 for 14 days. You can see here that NVIDIA was one of the strongest signal for short in this specific time frame for 2 weeks, which is supposed to end around here and do a really good performance for whoever short this specific stock. And another short forecast in April 16 that you can find around here, right before the big drop that we saw on the 21 of April that NVIDIA did. So that's helping us also, not just trading on the big stocks and the Mag 7, also know the direction of the market, because they are affecting the market in many ways. So
more than 2 weeks before the earnings, we could see that NVIDIA actually is the weakest stock among the Magnificent Seven, right, man?
Yeah.
I think it was very powerful tool that could help investors to take profit, for instance, or to move to another stocks, or to move to another Magnificent Seven stocks. There are some hedge funds that all their main focus is actually to adjust the weight of each stock within those Magnificent Seven stocks in order basically to beat the benchmark.
Yep, and a few examples for the ETF forecast that I mentioned earlier. We have it for 1 to 3 months, or 1 month, or 1 year, or you're getting the forecast. As you can see here, in multiple time frames, you get all the time frames from 3 days, 7 days, 14 days, 1 month, 3 months, and 1 year. Those examples for the 3 months and 1 year, we can find the XHB, for example, the home builders a sector that was recommended by the algorithm. You can combine this specific package with a stock package, for example, the top 10, and try to match home builder stocks from the specific universe to the ETF package that we see here. So we can find many sectors such as XLK, XHB, and many more others, TQQQ, that was recommended by the algorithm 3 months ago. And we can also find in the 1 year, again, we can see the XLK, XHB, VGT, and many other sectors around the globe and in the US market, ETF that are recommended to hold for 1 year that made a pretty good performance in that specific year. All right, let's talk about a little bit our strategies, and I think strategies are one of the most interesting things that the algorithm can generate, and automatic strategies that we are providing to our institutional clients on a monthly basis. We're gonna take a quick view of those strategy and how it works, just to show you how the algorithm actually thinks or how it operates in the open market. So we're going to see a few quick examples of the strategies that we are using and providing to our institutional clients. Here we can find the predictability, how important is the predictability filter that I talked about earlier. We can see here the charts of the same strategy using predictable stocks or non-predictable stocks or less predictable stocks by the algorithm, and we can see the results and the performance are different from chart to chart. The blue line represents the most predictable stocks, and we can see the performance is outstanding, while the charts that we can find in the end of this, in the bottom of this page, are in the non-predictable stocks, and we see that the performance is not that high. So also in your forecast and the forecast that you purchase, please focus on the most predictable assets. It's important for your investment choices. So all the strategies that we're going to see here are based on the S&P 500 index. It means the algorithm chooses stocks from the S&P 500 each and every month. S&P, of course, is considered to be the international benchmark for the stock market. A lot of institutional clients use it and compare their performance to it. And we have the SPY, that is the ETF that follow that specific index. And we can see the return in the last 30 years of this specific index. That was quite remarkable. And it's not easy to actually outperform this index, and a lot of companies and a lot of hedge funds are trying to do so, but the success rate is not that high, I can tell you that, after checking a lot of hedge funds and mutual funds that trying to hit this index. That is basically combined from a lot of technology stocks, healthcare stocks, financial services. We can find here the part of each and every sector in this specific unit in the specific S&P 500. And we see the big chunk that the technology have from the S&P 500. And I'm going to represent you a few of our strategies. The high performance strategy, which I think is one of the most interesting strategy, is actually focusing on high performance and giving us the best results just by choosing 20 stocks each and every month. The algorithm chooses 20 stocks for long or 20 stocks for short on a monthly rebalancing, which means that we are buying the stocks, and then after 4 weeks, we see the algorithm tells us to buy other stocks for long and short, and that's how this strategy works. And we can find the really good performance in those almost 3.5 years that we are seeing here. Compared to the S&P 500 itself. We have low risk strategy that focusing on small drawdowns and the low volatility for some of our clients. We have a long short strategies on the SPY itself. Just the algorithm tells us every month if to go long or short on the S&P, and we succeeded outperform this market in those 4 years. Of course, the blue line is the I know first strategies, while the orange line is the S&P 500, if I didn't mention that before. Again, we have a long only strategy that is used by, as Yaron mentioned earlier, by Meitav, the new collaboration that we are doing with Meitav that we are proud of. And another interesting, very interesting strategy is the long short sectors and industry strategy, which in that specific strategy, the algorithm chooses 1 or 3 sectors or industries to be in for long or short on a monthly basis, and that's it. Really easy to use, and the results here are pretty amazing, as you can see in the years that are measures here. And before starting and letting you see the entire strategies and how it built and go through it, the strategy universe quickly, I'm just going to show you a live portfolio that we are running, and I think it's really super relevant for this specific month, for April. I will start with the high performance strategy. Again, we are choosing just 20 stocks for long or 20 stocks for short each and every month. The algorithm provides us on a monthly basis stocks to short or to long, and we can see the returns in each and every year right here, and compared to the S&P 500. But the interesting part that I want to show you is the live portfolio that we are running from the beginning of this month. This rebalance happened on April 3rd, as we can see here on the bottom, on the top. It was closed today on May 1st, and the algorithm actually decided on the April 3rd to buy 20 stocks for short, as we can see here. That actually made came as a surprise for a lot of our institutional clients. Suddenly, in the middle of the month, or in the beginning of the month, sorry, to go short on the market with 20 stocks. And yes, the algorithm actually performed really good, as we can see here. The gains of each and every stock that it chose, these 20 stocks was chosen to short in the beginning of April, and this entire portfolio made almost 6.7% from the beginning of the month, while the S&P went down by 3.32. It's almost 10% that we made in outperform the market. The market, which is remarkable for a red and a bearish market that we had this last month. And here to the right, we can find the results from December 2023 of this specific strategy, the 2020. We can find the cumulative return was 23%, almost 24%, while the S&P just did 8% from this specific date. And so we can see the results in each and every month, the strategy compared to the S&P 500. And this is a strategy that we're really proud of. And I think it's really, really interesting going short on the market while the market went up. It was a good identification of the algorithm of the market itself.
Yeah, and it's very interesting to see among the stocks, Starbucks that is dropping today by 17%, as WKS that is dropping today by more than 15%. And you know, it seems to be obvious to take a short position right now, but think about the market on the beginning of April, while everything looks to be, you know, seems to be positive in the market. Everything was talking about the interest rate that might go down. And here we can see that despite this positive atmosphere, the algorithm was deciding to focus on the short sell side and to avoid any long position, basically. I can tell you like another story. One of the investment managers that are working with us call us to double check this position, you know, ask for the reasoning behind this position, what the algorithm is taking into consideration when we going to short, when we're focusing on the short sell. It wasn't that obvious, let's say.
Yeah, we tell them that in AI we trust. That's what we answered him.
Yeah.
So to get through another interesting strategy that been used by our institutional clients, actually, it's the level 1, level 2, the sectors and industry strategy. To whom doesn't know this specific world of or investment universe, S&P 500 is divided by 11 main sectors. We can find the energy, XLK, XLE, XLV, financial, healthcare, technology. A lot of the sectors are here, and 224 industries, as we can find here, the XSD, XAR, XHB, KBE, the banks, the regional banks, and those 24, of course, belongs to this, are combined from these 11 big sectors that we can find on the left. For example, the semiconductors is belong to the XLK, the technology sector, that we can find in the level 1. And this from this investment universes, the algorithm is generate a systematic trading system that we can actually long or short specific sector each and every month. And we can see the result here on the top of it, with 254% in those 3 years that the algorithm made. And not just that, we can also see which sector the algorithm decided to choose or to focus on in this specific month, in every specific month. In 2020, for example, choosing the XLF, then if you're seeing the red arrow, the algorithm decided to short a specific sector. So he shorted the XLRE, the real estate, go long XLF, XLF, XLK, XLI. We can see multiple sectors that the algorithm chooses, but it's a really simple strategy. The algorithm just choose one sector, long or short, for the next month, and the results here are pretty amazing. We can see what happened in 2021, 2022, in 2023, that we can see here, for example, the short that made on the XLF, the financial sector that Yaron mentioned earlier. The algorithm decided to short this specific sector, and that's what made this gap from the S&P, and then the technology, industrial, up until the rest of the year. And another interesting strategy from this specific universe is the level 2 one, that instead of choosing just level 1 sectors each and every time, the algorithm choose 3 long or short best industries from the forecast. And we can see the remarkable return here of almost 500% in those 3.5 years. And more than that, we can see in each and every rebalance which industry the algorithm chooses to focus on. For example, here in 2020, doing short on the real estate, the retail, and the telecommunication, or long the banks, the capital markets, and again, telecommunication, as we can see here. And each and every year, each and every month, the algorithm choose the best industries, 3 industries to long or short in this specific strategy that we really like. In 2003, for example, as we shorted the XLF in the level 1 in strategies, here we can find the best 3 industries that the algorithm shorted in the beginning of March, which was the banks, KBE, RWR, the real estate, and the insurance company. For example, KBE and KIE actually related to the XLF, the financial sector that we saw earlier. And we can see the results again from different months this year of this live portfolio, and even the last portfolio. We can see that we actually outperformed the S&P. Although the S&P went down by 3.3%, we made the minus 2.3%. That's, for institutional clients, is gold. I mean, doing less than the market, going down less than the market, worth a lot. And we can see that the sectors or the industry that the algorithm chose went up for this entire month, which is really, really interesting to see on a really volatile month such as April. This specific strategy, is the Meitav that we collaborate together. Meitav is actually using this strategy in one of her mutual funds. Really proud of it, and a really interesting strategy that's involved the long only strategy that we can see as well, and also made some pretty good returns last month. We can see the total return comparing to the S&P and the amount of stocks, 40 stocks that the algorithm chooses from the S&P 500 itself. It's not going, trying and finding in the entire US market. It's focusing on the best part of the S&P 500 each and every month and providing it to our clients, which I think is really, really interesting and useful. And the last strategy is the take profit strategy. It's another interesting strategy that in this specific strategy, the algorithm checks every day its performance compared to the S&P. And if the performance of the portfolio is more than 1% of the S&P, the algorithm is actually selling the entire portfolio and buying the S&P till the rest of the month. And in that way, we are locking the gain that we did up until the rest of the month, and keeping the outperformance and the advantage of the S&P the entire month. And we can see here that 41 out of 52 times from the rebalancing of this strategy, we took the profit and lock it up until the rest of the month. Interesting strategy that's focusing specifically on hedge funds that our clients want to beat the market or beat the S&P on a monthly basis. It's a great solution for our institutional clients that in this webinar you can, of course, talk to us by sending me an email or in the website. Please go to the customized hedge fund service, and we'll try to find some strategy that fits to you as well.
Yeah, all the strategies, by the way, are before dividends, and another advantage of those strategies, the trading cost is very, very low, since we're doing 1 month in every month, we're doing one rebalancing per month. So we are not trading those strategies on a daily basis. It's very low latency. It's like a low latency strategies. And it's another advantage of those strategies.
Yep, and I saw some question about crypto, of course, that is always around us. We also provide a forecast for the cryptocurrencies, and many packages for the cryptocurrencies, more than 100 cryptocurrencies that the algorithm is actually scanning on a daily basis and giving you the best ones, as we can find in the examples here from the last April, in the 3 days and even the 1 year forecast. And we can see the remarkable returns that we have here. Again, it's a high risk assets and high risk forecast for those, of course, as the crypto itself. But for the crypto lovers, we also have really special forecast and packages that you can find in the website.
Yeah, some of the packages are focusing on ESG investment. You can find it in the pricing page that I paste in the chat window as well. There is a package that focusing on ESG investment, on the Barron's most basically sustainable and responsible companies.
Yeah, where you can find this package as well. And we have many other packages, as we saw, the word indices packages that I think is pretty amazing and giving us like intelligence for the market. We have fixed income packages. We have commodities packages that a lot of people interested in by trading the futures or the commodities itself. Currencies forecast, of course, then have more than 75 currencies around the globe that the algorithm give forecast on. And And of course, as Yaron said, multiple stock exchanges around the globe, as we can see, for example, the Canadian market, European stocks that looks pretty good in the last month, and we talked about it in the last webinar that Europe looks quite good. And we also have packages for Europe and for the UK, Japan, South Africa, Italy, Saudi Arabian stocks, Australian stocks, basically all around the globe. We have a package for each and every big stock exchange that is tradable. The Indian market as well, that was really popular in the last few months. Also, we have a package for this specific universe, and we also actually launched not long ago with the big broker firm in India, Shunya and Finvazia, this trading solution for 100,000 Indian traders can use the algorithm on a daily basis, and they can actually launch and connect into their platform and see, as we saw earlier, the forecast for Indian stocks, large cap, mid cap, and small cap, and different time frames that you can see. The example is mentioned right here. So this is really one of the elaboration that we are proud of. All right, we are getting to the end of the webinar, but before seeing what's the algorithm thinks about the markets, I have a quick test for you that we talked about it in the last webinar. And the last month forecast, as you can see here, was really interesting. Why? Look at the Nasdaq 100 that you can find here, the Dow Jones, the real estate and the regional banks. That was what was colored red in the last webinar. We actually told you and showed you what the algorithm think about the main indices in the US. We can also find the S&P 500 right here in the bottom with a really low signal in the bottom of the forecast, which is a really weak signal for this specific index. But again, and we can see that the performance of the Nasdaq, the Dow Jones, that was painted red here, actually went down, and we can find some interesting stuff that went up. For example, we can find the VIX that we saw it here in green. The volatility actually rose in this specific month. We can find European banks and the Eurostoxx 600 also didn't quite went down this month because they were painted green. And another interesting thing that we can see here, of course, is the banks that I talked about in Europe that basically look better than the US market, and we talked about it in the last webinar. So here it is. For example, the stocks banks that I talked about is SX7E, is one of the leading symbols that we see in this specific forecast, and talked about it in last month. So that's about what happened in April, and now we're going to see what actually the algorithm thinks on the next month, on May. I'm sure you're all interested.
Is it you, Ben, looking at this?
It's me looking at the bulls and the bears. Try to pet them. So for the level 1 and level 2 that I mentioned earlier, and that include the best sectors for level 1 and level 2. If we're talking about the level 1, we can see the forecast. This is the forecast from today, of course. Yeah, the forecast for the next month. We can see the XLE, the energy, and XLP is in the up side of green side of this specific table. We can see the industrial sector as well is actually painted green, but a lot of the sectors that you don't see here, of course, because we are giving you just some of the forecast, just a quick taste. But we do see that the real estate, the XLRE, is pretty red, reddish, and so is the XLF. The financial sector doesn't look that good, and even the technology sector looks a little bit reddish. So take that for your intentions and watch the market. I must say that the shorter time frames look much more volatile than we see it here, but we're gonna see a 2 weeks forecast in just 2 or 3 minutes. And in the level 2, which is the 24 industries in the S&P 500, we can find some interesting industries such as the semiconductor that is coming back, being green. The home builders as well look quite positive in the 1 month prediction, and the capital markets, as we can find here. Again, XLU, the utilities, which is quite a defensive industry.
Yeah.
I didn't mention it. It's leading the forecast, but the predictability filter, as you can see here, the predictability indicator is pretty low. It's 0.2. I keep saying that we are looking for high predictability levels for 1 month, around 0.4, 0.5 is pretty high. And aerospace and defense XAR looks quite interesting as well as industry. For short, still RWR, it's the real estate again, and the regional banks. So is the biotech, look pretty reddish and not that good for the next month. And it's a new map that I'm introducing today. It's the indices and sectors map. It's actually available only to our institutional clients, but I give you a glimpse of what is actually going to happen in the next 2 weeks. We're seeing a lot of interesting stuff, such as the Chinese market. MCHI is pretty green. Again, the predictability filters here, indicator here are pretty low, so we have to take that in account. But we're seeing again the Indian market pretty strong. We can see the European banks look quite good. The semiconductor, that's XSD, also looks quite positive in the next few 2 weeks. The SOX, again, the semiconductors, the Russell 1000, IWB, is looking one of the good indices in the US market for the next 2 weeks. And home builders also look quite positive. Not quite a strong signal, but still positive. In the red side of the table, we can find the Nasdaq and the S&P 500 that look a little bit reddish. The energy for the shorter time frames is quite negative. We saw a lot of indicators that show that negativity of the energy sectors. The Dow Jones also doesn't look that good. The real estate, as we saw earlier, XLRE and RWR are both related to the real estate, and the technology as well doesn't look that good, or a little bit volatile in those 2 weeks. Again, this situation may change. We have a lot of announcement today and a lot of data that's coming up, but for now, this is the look for the 2 weeks time frame that the algorithm suggested us. Of course, we have it for all the 6 time frames, but we just gave you a short glimpse of the 2 weeks forecast for the market. And another quick look at the market is the Magnificent Seven that we talked about earlier. We can see the forecast for this 7 big stocks that the algorithm is actually ranking. We can find Tesla, Google, Apple in green, and the rest are pretty reddish. But this is the 1 month forecast. Of course, whoever buy this specific package can get all the time frames from 3 days, 7 days, 2 weeks, 1 month, 3 months and 1 year. And really interesting package that is available on our website. And this is the prediction for the next month. So to those, the one that stay with us all this through almost 1 hour and a half in our webinar, we're suggesting 2 really interesting sale. only for the 24 hours, for the next 24 hours, you can buy 2 packages in $299. You can choose from the bar that you find in this specific page. You can find the 2 packages that you like, and you get them in $299 per month without any commitment. You can combine 2 packages that we saw, for example, in this webinar, such as the ETF and the S&P 500 or the top 10. You can make a real nice combination out of this specific sale. And another sale that is...
By the way, I just paste this link into the chat of the first deal, of the first deal that
for the first sale, you can find the link in the chat. But listen for the second sale before you do that.
Okay.
The second sale is the 6-month subscription, in which you get the same 2 packages that you saw in the sale number 1. You can choose any 2 packages from the website or from this specific page, and to get it for $269 per month. But you get the Big 8 or Magnificent 7 package, which we saw earlier, that includes all of the forecast of those Big 8 stocks and the US indices. As we saw, the S&P, the Nasdaq, the Dow Jones is in this package. So you are choosing 2 packages and get the third packages, the Big 8 package, for free. And this is for our second webinar sale, a 6-month subscription that you can find. You can choose 2 packages and get the third Big 8 for free. I think it's quite amazing and quite popular, and it's available only for the next 24 hours. And Yaron is putting the link in the chat that you can, of course, check it out and see which packages you find suits for you. But we're going to help you by choosing those packages. And my recommendation is to combine the ETF package with the S&P 500 package right now. As I said earlier, finding the best sector from the ETF package, you can see if it's home builders or technology or finance, and then choosing the stocks from the S&P 500 package that related to the same sector it's an ideal way to choose stocks and doing stock picking. So my pick is combining the ETF with the S&P 500. Yaron decided to go on the ETF and the top 10, which is also interesting. The top 10 package is, as I said earlier, is choosing the best stock from the entire US market, and you get the S&P 500 index forecast as well in it, and is combining again with the ETF package. That I think nowadays it's the most interesting package to choose from, to know which sector is recommendable, which sector to avoid.
Which sector or region, as we saw with China now. Yeah, another interesting thing about the second deal that you presented, it's possible to change the 2 packages every month. There is no commitment for a specific package, so you can try 2 packages for 1 month and then to change it by sending us an email. Another upgrade, we are not providing a daily forecast just for the Magnificent 7. We are providing actually daily forecast for the also for Netflix. So we have upgraded this package, and also, as you mentioned, Ben, we are also providing daily S&P 500 forecast as part of the Magnificent 7 package, daily prediction for the Nasdaq and also for the Russell. So in a way, it's a very powerful market intelligence package that can assist you to identify the next trend in the market, when you should focus on the long side, when you should focus on the short sell side. And I think it's very powerful add-on to any 2 packages that you can choose.
Exactly. So Again, the two sales that we suggest to you is the first sale, buy one, get one with $299 per month that you can choose two packages that suits you from the webinar sales page. On the other one is a 6-month subscription deal that you can focus on or choose two packages and get the third one with the Big 8 package for free. I think those are two interesting sales that we suggest to you guys. So I see quite a lot of questions. I hope we answer most of them. But let's see if we missed anything.
Okay. What is the price of the $299 two-pack deal after the first month? So yeah, to answer that, it's a fixed price. There is it's going to be always, it's a lifetime deal, $299 without any commitment. You can change also every month and move to another two packages. So there is no commitment at all. I'm a small RIA in the US. Can I talk with someone on how I can best use your service with my clients? Sure, please contact us. You can find the email in the website or contact Ben directly, and we will assist. There is a question regarding the trading cost. I think we answered that. We answered it. Also, there is another question about dividends. All the charts that we have seen are before dividends. Semiconductors, SOX-L, do you have an outlook for this ETF? Yes, we do. I think we saw it in the ETF package. So feel free to utilize the ETF package, and SOX is part of this universe as well. Ben.
Or the indices package, by the way. The
Or the
SOX.
indices package,
You
right?
can find the SOX if you meant for the SOX from the index, you can find it in the indices package, which is also quite interesting and large. We have more than 175 indices and sectors that in this specific package. Any other question that we missed?
Yeah, do you offer currencies prediction? Yes, we do. It's part of the examples that we have presented today. Feel free, you can find in the website the option to receive daily currencies prediction or forex prediction. Yeah. I think, Ben, we answered most of the
Yeah, we answered
questions.
most of them, which is pretty good.
Okay.
I think
The daily forecast is being set on a daily basis to your email. So this is to answer another question that I see. Another thing, all the predictions are being sent every day around 5 o'clock in the morning, New York time. So when you opening your computer in the morning, you're going to receive the heat map with the best opportunities for the next day, basically, on a daily basis.
all right.
Okay, great. Ben, you did it again.
Friends.
Thank you very much for the great webinar, Ben.
Thank you, Yaron, and thank you for all the audience that stay with us 1 hour and a half. I really appreciate that. And of course, we're going to see you next month in our monthly webinar. And hope you will enjoy the webinar cells that we provide for the next 24 hours.
Thank you very much. Thank you very much. Thank you for the
you.
warm things and the warm feedback. Thank you, guys.
Bye bye. Have a good day.
Bye bye.